Welcome to Capital Link's company presentation series.
Good day to everybody. I am Nicholas Bornoz of Capital Link, and I would like to welcome you to Capital Link's corporate presentation series. We are kicking off the series today with a presentation by Eneti. The usual disclaimer that this is not a solicitation or investment recommendation. This is purely for information purposes. And I would like to say that we will start with a presentation, and then you can submit your questions to be answered by management. You can submit your questions at any time during the presentation, and the Eneti management team will reply to them after the end of their slide presentation. I will turn over the floor to Mr. James Doyle, Head of Corporate Development and Investor Relations of Eneti. James.
Thank you, Nicholas. And Capital Link. Joining me from the Eneti side today is Erik Gurrik, a managing director at Eneti, and our president, Robert Bugbee. We're going to give a brief presentation and look forward to having some time for Q&A at the end of the presentation. If we could please go to slide 3. Eneti is a leading owner and operator of offshore wind turbine installation vessels. I know that sounds long. It's short for WTIVs. Our vessels transport and install wind turbines and foundation pieces at offshore wind farms around the world. Our customers include wind farm developers, EPCI companies, energy and utility companies. We have 5 vessels on the water today and 2 new buildings on order. Our new builds are being constructed at DSME in South Korea and deliver in Q4 24 and Q2 25. Offshore wind is a rapidly growing industry and has become global, with new and existing regions adding significant capacity. However, one of the biggest constraints or bottlenecks is the lack of capable vessels that will be able to install next generation turbines. Slide 4, please. So I guess the question is, how did we get here? Well, as a group with extensive maritime experience and years of looking at the offshore wind value chain, the company found an opportunity. The growth and potential of renewable energy, specifically offshore wind, was tremendous. Wind turbines had increased in size, which raised the output and efficiency of offshore wind farms. But the challenge was that the height and the weight of the new turbines had grown at a faster pace than the maritime supply chain could keep up with. In other words, there would not be enough vessels capable to install larger next generation turbines. In 2020, Eneti made the decision to transition from dry bulk and focus on offshore wind turbine and foundation installation. By May 2021, we had ordered our first new building vessel in Korea, which would be capable of installing next generation turbines. At the time, we had been discussing building our own commercial and technical department or merging with an existing player. And we were fortunate after several months to announce our acquisition of CJAX, which is and was at the time a leading owner and operator of WTIVs. CJAX had a great track record, customer reputation, management, employees, and vessels on the water. What they needed was to modernize their fleet with assets capable of installing next generation turbines and to restructure their balance sheet. In December of 2021, we raised $167 million to execute an in-the-money option on our second new building at DSME. Over time, we've restructured their balance sheet. We've repaid CJAX bank debt, loans from previous shareholders, and refinanced the existing fleet with a new $175 million credit facility. In August, we divested from a legacy investment in Scorpio Tankers and used part of the proceeds to repurchase 2.3 million of the company's shares. In addition to disposing of our legacy investment, we identified 3 of our oldest assets, the NG 2500s, as non-core, and are exploring the potential sale of these assets. We finished 2022 with an announcement on the employment contract for our first new building vessel at a very attractive rate. And looking forward, we are excited about 2023 and the years after. Slide 5, please. There is tremendous growth potential for offshore wind in the near term, medium term, and long term. From 2021 to 2027, offshore wind is expected to grow at a CAGR of 14%. Next year and those after, annual capacity additions will more than double compared to 21 to 23. And the outlook beyond 2027 is very attractive. We're just showing projects in these charts that have received FID. To put this into perspective, in 2018, offshore wind accounted for 0.3% of the global electricity supply. By 2040, it could increase to 3% to 5%. However, one of the critical bottlenecks in the offshore wind build out is vessel capacity. And with that, I will turn it over to Erik.
Thank you, James. Slide 6, please. So one of the things we want you to take away from today's presentation is the bottleneck that wind turbine installation vessels are in the market today, and how Eneti is placed to be in that value chain. So if you take a look at turbine installation, it accounts for 2% of offshore wind capex, yet it is extremely critical to first power. As the demand for wind turbine installation vessel increases in new markets such as Asia and North America, supply will become increasingly tight. And as turbine increases in size, the number of capable vessels that are able to install these turbines declines. So if you look at the chart on the upper right corner, you will see the supply and demand curve from 4C Offshore, stipulating that only 16 to 17 vessels are capable of installing the 12 megawatt plus turbine in the years to come. Slide 7, please. So this is an overview of the Eneti fleet with 5 vessels on water and 2 new buildings under construction at DSME, and our 3 and with these 2 new buildings delivered in 24 and 25, Eneti will be positioned as having over 20% of those 16 vessels capable of installing 12 megawatt turbines, with first and foremost the Scylla, which is the most advanced vessel on water, and then with 2 NG16000s that is going to be delivered, expected in Q4 2024 and Q2 2025. The 2 new buildings will have a 2,600 ton crane capacity and lifting turbines and capable of installing turbines up to 20 megawatt plus. And the Scylla, that is currently an NG14000, will be capable of undertaking a crane upgrade that will increase her capacity over and beyond what she's capable of doing today at 12 and 14 megawatt, up to the 20 megawatt turbine class as well. Next page, please. So if you look at our new buildings and what they bring to the market, as I say, they have a 2,600 ton crane capacity with a hook height of 155 meters above deck, capable of installing 20 megawatt turbines. They represent and brings to the market an operational efficiency to the customers with a large carrying capacity. And in addition to that, it has a materially lower emission profile than the existing fleets. So with these 2 new buildings, we have compared them with other vessels we have in the market, and we will expect to see an emission saving on these new buildings with 31% if we run these vessels on marine gas oil, and with 72% if we decide to run them on ammonia, which they are capable of. NESI and Siren, due to their large crane capacities, represent a large addressable market with installing wind turbines, but also capable of installing foundations for these offshore wind farms. They can install the sizes of monopile foundation installations, jacket foundations, and also capable of doing drilling work for foundation installation. With this flexibility, they bring value to our customer in terms of reduced cost for mobilizing and demobilizing multiple vessels, and also the installation time it takes to construct a wind farm, and a simpler contracting process, and with only contracting one vessel for foundation and the same vessel for wind turbines. And this, all in all, is a potential for higher day rate and higher utilization. Next page, please. So we have seen, I've been working in this market since 2011. I've seen turbines increase from 2 to 9 megawatt over a 5-year period, and now we see a doubling over the next 4-year period. And what we bring to the market, we have an extensive experience with installing over almost 600 turbines since 2009, when we delivered the first vessel into the waters. We have installed approximately 500 foundation structures and substations in that period. We are a company of 400 employees worldwide, with 100 onshore staff and 300 crew members, and have overseen the construction of all our 5 vessels on water, on budget and on time. Collectively, and with Seajacks being a part of the wider Scorpio Group, we have undertaken 180 new building projects since 2012, and that's why we consider our new building project in Korea as extremely attractive. Next page, please. So we have been and have operated our vessels in all of the markets known today. Obviously, we started off installing turbines and foundations in Europe, and have trusted relationship with all the major clients in the region. And we were one of the first that had a leading foothold in North Asia, installing and have undertaken installation of foundations and turbines on the Akita Nashiro project with the Saratan in Japan. And we have also finalized the construction of turbines in Taiwan for Ørsted on the Greater Changhua project. We have also undertaken installation of wind turbines in Chinese water through third-party client. In addition to that, we have a strong foothold in North America with our extensive collaboration with Dominion Energy, and we are working on a consultancy basis with Dominion Energy, supplying them with our and supporting them in the new building phase of the first Jones Act wind turbine installation vessel constructed, the Charybdis. In addition to that, we are supporting them setting up the operation and technical management of that vessel. So all in all, we believe that the company has a strong foothold in all major offshore wind markets. Next page, please. And then I leave it over to James. Thank you.
Thanks, Erik. Well, this is our revenue backlog and project pipeline, and I think commercially, the Seajacks team has done an amazing job. The 2022 and 2023 revenue backlog for the existing fleet has increased by over $140 million since November 2021. Demand has increased, rates are trending higher, and utilization is ticking up for all types of WTIVs. We've contracted our 2 largest assets, the Scylla and Zaratan, for 2023, and we're in the process of contracting these vessels for 2024 and 2025. Our smaller vessels, the NG-2500s, are in the process of being contracted for this year, and we're optimistic about additional contracts not seen in this chart that could come at higher rates and longer durations. And we're in a fortunate position when it comes to these assets because they can generate positive cash flow while we explore a potential sale. And lastly, the backlog does not include our recent announcement on the first new building contract. But if we could go to slide 12, please. This was announced at the end of December. We signed a contract for the employment of our first new build. It's a great milestone for the company and for our shareholders. The contract itself is expected to be between 226 to 276 days and generate 60 to 73 million euros of revenue after project costs. And this would equate to a day rate of roughly 265,000 euros per day. And congratulations to Carl, Erik, and the CJX team who spent a lot of time working on this. Hopefully there's more to come. To the right, you can see the EBITDA sensitivity at various day rates, and this assumes 85% utilization. So at $260,000 a day and 85% utilization, each new build would generate 64.2 million, or a high teens cash on cash return. Given the significant demand and lack of capable vessels, we are optimistic on an improving rate environment and utilization for our fleet and these new builds. In other words, the potential EBITDA generation should be at the higher end of the range in this sensitivity analysis, and we're really excited about that. Slide 13, please. Our balance sheet continues to improve. We have conservative leverage, strong operating cash flow, and a healthy liquidity position. The financing of our new builds vessels is underway. We have received a proposal from Credit Agricole and SocGen for a $436 million term loan facility, or 65% purchase cost of the new builds. In the graph to the bottom right, we're showing the CapEx payments and schedule, as well as the expected finance under 60%. So for this purpose, you would have a higher cash in upon delivery with drawing down on the new loan facility. Slide 14, please. To sum it all up, Eneti provides investors with exposure to a rapidly growing industry and a company purely levered to offshore wind. The transformation of our asset base and balance sheet continues to progress. Next on the list, we have a new building, a contract for our second new building, as well as the new build finance, which we're working very hard on. And we, like you, are excited to contract the existing asset base and new builds at higher rates in what appears to be a very undersupplied market. And we're really excited for 2023 and beyond. And with that, I think we can turn it over to Q&A. I'll wait for some Q&A questions to come in here, but I guess to start with one, and maybe to Carl, Erik, and Robert, the employment contract for the first new build is at the highest daily rate announced over the last few years. Do you expect these rates to be able to continue at these levels?
Yeah, thank you for the question. I guess as we try to outline for everyone in this presentation is that the market that we're in represent a huge bottleneck with a high undersupply of capable vessels as the turbines are growing. We are participating in a lot of tender activity at the moment and has been doing so for the last year. Also participating in the same tenders as our peers and competitors. We are searching for the right contracts that make sense to us. And with the first contract announced, we felt that was one of the that was a good fit, both in terms of customer, in terms of terms and conditions, and in terms of commercial aspect. And as we are moving along with securing other contracts for our first new building and our second new building, we tend to see that the rate level and the terms and conditions that we have had on the first new building will expect to continue.
Great. A couple more questions coming in. What is the optimal number of modern vessels for the company, and how long does it take to grow the fleet to that optimal size? Robert, would you like to answer this one? Well, Carl,
Sorry,
why don't
James, can you repeat the question quickly?
what is the optimal number of modern vessels for the company, and how long does it take to grow the fleet to that optimal size?
We haven't gone through that calculation, at all. I think that at this particular point, we're just focused on getting the return on the capital and the assets that we have, and we clearly have enough size to operationally make the company function properly and attract the solid customers. And I think that the actual finance side is going to be much more prone to actual revenues to start with, and that's what we're focused on right now.
Great. And Robert, another one for you. Do you expect to continue repurchasing shares? What is the criteria to do so?
I don't think the company will be repurchasing shares at this particular point. The company has still got to finance its new buildings going through. If the strategic answer is to sell the NG-2500s, maybe then we'll get some spare cash capacity. But I think that as has been shown, when the company bought shares, it bought a lot of shares at that time at a severely discounted price. Today, obviously, it's discounted, but the difference between today is we don't have that real spare cash in the model. Now, if we move forward, we, for example, fix the second Doyle ship, we put some more secure revenue on, or we do something with the NG-2500s, that could change.
Great. Carl, Erik, this one might be for you. Given the lack of vessels, is there a chance projects could be delayed because they don't simply have a WTIV to install the turbines?
Yeah, that scenario might very well happen. And we are talking about bottlenecks in the wind turbine installation vessel segment, but there are also significant bottlenecks in the foundation installation vessel segment. So for installing a turbine, you need a foundation, right? So, and that is one of the reasons why we decided to outfit our new buildings with the 2,800-ton crane, not because that is the size we predict the turbines to be at a certain stage, but because of the flexibility it gives us also to be participating in foundation installation campaigns. So it is a chance that if you don't secure the capacity, then the developer might be without either a foundation installation vessel or a wind turbine installation vessel. And we see that already today, where we didn't expect that we would secure the Zaratan and the Scylla for 2023, but we actually secured that 1.5 years in advance. And we have now secured a contract for the first new building 3 years in advance. So we see that the contracting time and the developers eager to secure capacity is strengthening, and thereby we would also anticipate that the commercial terms would also be strengthening.
This next question is kind of related to that one, so I'm just going to ask it, and there's a few more after. But so the question was, do you see the industry moving towards longer term contracts, especially kind of given the supply demand balance you were just referring to? Do you think that the industry will move to longer duration contracts, whether it's the developers or other energy companies looking at the space?
Yeah, and we have already seen that from our peers that have secured long-term contracts for some of their assets. We also see that some of these developers are out in the market trying to secure capacity for a larger portfolio, which they have control over. So yes, that's a clear trend that we see, but there's always a balance between that long-term contract and what you gain, and also the utilization of being not participating in the long-term contracts. So we will evaluate that market carefully, I would say.
Okay. I guess I'll take this one, but for everybody, there were some discussions about a U.S. new build WTIV, but no deal was concluded. Any further news on this? So we're still consulting Dominion Energy on the new build that is being constructed in Brownsville, Texas. We decided to pause our new building project because we needed three things. We needed a U.S. partner, we needed a contract with the shipyard, and we needed a customer contract. And we made significant progress in all those areas, but eventually the first series of projects that we were looking at, the employment contract on the vessel, were going to be too close to deliver, or actually the delivery was going to miss that first contract. And given the significant cost and risk associated with either missing that project or not having a project before, we thought it was best to focus kind of on our international new builds and new build finance. And so that's where we focused. There could be opportunities there going forward, and we're certainly excited about the U.S. offshore wind farm development. In other words, it will take a foreign flagged vessel to complete that work scope, which ultimately tightens our overall market. There's another one here. Okay, I guess what's the biggest challenge for the industry and company? Robert or Carl-Erik, do you want to take that?
Carl-Erik, off you go.
Thank you. Well, the biggest challenge for the company is obviously to for one thing is to secure the right contracts for our new buildings, and also secure the right contracts for the current fleet. We have the Scylla that can do a crane upgrade to a 2,600 ton crane, which is the same crane as that we have on the new buildings. So, but currently we have decided not to bring that forward because the market is so tight. So we believe that we find work for her for that vessel for the near future. The second is that we obviously want to find the right contracts for the new buildings, and either it will be in Europe, in Asia, or in North America. So that's two things. Thirdly, I think it's a matter of finding the right finding the right cooperation partners, and also finding the right people for our new buildings and the remaining fleet. So those are three things that I would mention, Robert.
And I would probably add, I think when it comes to the industry and it comes to the supply demand side of the business, I mean, the market is clearly undersupplied. There's going to be demand for more vessels than are currently being built, as well as any that could be upgraded. However, you know, and Carl-Erik and the CJX team have done a great job with this higher day rate on our first employment contract, but asset values are going up at the yard. So if you're looking to build another new build, which the market clearly needs, you need to make sure that you're going to receive a day rate that will justify the return of that investment. And so I think that could be a potential bottleneck, because your customers are certainly going to have to pay more money for the supply side to build out further. That is, let's see, do we have any? And then it looks like, I guess we Robert kind of covered this. Do you require additional equity to take delivery of the new builds? I think we can just say, you know, with the potential sale of the NG 2500s, the cash flow from the existing fleet and the 65% new build finance that's currently being discussed, I think we're all set on that. Is there any other questions out there, audience? Oh, here we go. Sorry about that. Here we go. Here's another one. Do you plan participating directly with the Jones Act compliant vessels or through partnerships?
By definition, we have to have a partnership.
Correct. And as of now, we're just consulting Dominion. What should investors expect with regard to typical contract duration?
Well, it depends. A typical it depends of the project sizes, but we see projects with durations vary from what we have already received for the first new building, occupying the vessel for 270-ish days, up to a year in duration. Obviously, with the long-term contracts that are currently in the market, typically developers are looking for 3 to 5 year contracts. But it all depends on whether that is the best route for the company. So it's always a balance to go for the long-term contracts, which or to stay on project by project. We see in some regions of the world where typically the developers have a consent for smaller wind farms in the range of 500, 600 megawatt. But in these locations, we see that the combination of 2 to 3 projects per year is possible. We also see a combination of in certain regions where you have very low, where you have good installation criteria in summertime, but in wintertime there is relatively harsh weather. But in adjacent areas, that situation is turned around. So you could see combinations of regions where you would typically install in one country for the summertime and then turn to other countries during the winter time and build and increase the utilization. Also, which we have mentioned several times, with the flexibility of these new buildings able to undertake also foundation installation work, we see that the utilization will possibly also be high.
So there's a couple more questions here, and thank you, Carl Erik. I know we are getting a little bit closer on time. Quick one for you, Carl Erik. Have we reached peak size dimensions of turbines, wing speed, things like that, et cetera?
Yeah, thank you for the question. I mean, when I started working in this segment in 2011, we saw 2.53 megawatt turbines, and we didn't believe that the turbines would get any bigger than 5 megawatts. So only 2.5-3 years after, at least my experience taking delivery of the first vessel back then, we had to upgrade the vessel with extending legs and extending hook height. So it's hard to say how big these turbines will be, but with the crane capacity, with the hook height that we have, and with expansion possibilities of that platform, we believe that we will be that the vessels that we have under construction, and also the possible upgrade of the Scylla when the right time comes, that we will be in this market for a long time, being able to undertake installation of 20 megawatt plus wind turbines.
Thank you, Carl Erik. Okay, so the next one's a combination of a few questions. What is the current new build cost? What is the lead time to build a new vessel? And what does the order book look like? Or what is the percentage of fleet? So not sure on what it would cost to build a WTIV at a Chinese yard. I think we could say if we were to build a similar vessel to ours at DSME in Korea, would probably not be able to deliver till 26 or 27, and it would probably be 15 to 20% more at least. And on average, we paid 327 million for our new builds per vessel. In terms of capacity, I think we had it in the presentation in terms of what vessels can do 12 megawatt capable plus. It's a little bit under 19, including all the new builds on order. And I think you could add a few vessels in there for upgrades as well, but we're talking, less than 25 ships. So it's a very small fleet. What important milestones should investors expect in 2023? Robert, would you like to take that?
Sorry, James, I didn't have good reception. What was that again, please?
What important milestones should investors expect for 2023?
I think the first milestone will be the employment of the second Daewoo new building. And we could see a milestone related to the NG2500s in one form or another, whether that's a sale or a benefit, a different benefit through revenue for the improvements in the offshore markets. I think those are the two milestones that we're looking for at the moment.
I would agree with those. And Carl Erik, this one probably for you. And the question is, what improvement in the addressable market will be implemented as a result of new vessels?
What improvement?
I think it's better asked, what will these new builds, these next generation new builds and their capacity do to kind of the offshore wind market? Will it, for example, increase the number of projects in Asia or the US or different areas? How do you see that playing out?
Well, I see that obviously with the vessel being larger, they are being more capable. They are able to install in harsher environment, meaning they are able to jack up, they are able to position themselves and able to lift in harsher environment. And might I say the older generation wind turbine installation vessels. And by that, they are able to install more turbines or foundations during a year. That will increase the efficiency. In addition to that, these new installation vessels, and you will probably see that across the scope. If you look at the technical specs of our vessels, they are installed with functionality and feasibility that would lower the emissions, as we have tried to illustrate earlier in the presentations, and also that these vessels are able to undertake foundation installation and turbine installation vessel with the same asset. Instead of taking two vessels, you can have one vessel per project, basically, if you wanted to run them in continuous direction.
So this two questions, somewhat similar, so I'm going to ask them together, Robert. First question, is there any potential for consolidation in the market? And the second is, how would you view pros and cons with consolidation to increase fleet size?
Yeah, I think there are definitely opportunities for consolidation in the market. I think that can happen in different ways. That can happen from public to public companies. there are benefits to fleet size in terms of better scheduling. There are one of the weaknesses in this industry is the fragmentation from the ownership side. So, you're going to get, the benefits, you would get the benefits of consolidation that way, but most of it would be the actual scheduling aspect of it. And another benefit would be you in a way de-risk, because most of these companies have a small number of units that are expected to earn a lot of money, and they're still maritime assets, so they're still subject to accidents, etc., and so therefore you would de-risk it with a greater number of assets.
Agree. The Eneti is well suited for additional assets, and I think
well, it's well suited for additional assets, but its NAV is so far below NAV that it's certainly not going to be looking to acquire anybody at the moment in a consolidation situation.
Right. I guess also related, any thoughts on the Havfram entrance to the space? Maybe Erik, you have a thought?
Welcome to the space. In a way, I know Havfram has worked a lot to lift this new building, and it basically as a newcomer with in the space by declaring one vessel for construction, and also by the press releases they have a ambition to have more. I mean that is it's an NG 20,000 and a little bit bigger than our vessel. However, we believe that our vessels and new buildings with the crane capacity they have, we believe that the platform that we have decided to construct, with the combination between the deck area and how many units you can have on deck, in combination with the operational capabilities and the crane capabilities, that we are very satisfied with the choice that we have made. So I think that's the answer to that question.
Yeah, well, it certainly helps confirm our thesis, right? And they're looking at the same projects and supply demand imbalance that we are, and there's certainly capacity, right, for this additional vessel. So it certainly shares our view that the market's going to be undersupplied. We are just about out of time. There's couple more questions. Sorry if we didn't get to yours, but we have when and what time frame can we expect a contract for the second new build vessel?
2 o'clock, 2:21 this afternoon, I would have thought. I try and get a bit more accurate than that. Look, we're not going to get into ever. We've gone over this before. We appreciate the importance of it, but we're, as a strategy, as a company, we're not going to indicate or give the market any idea on, when we would get contracts. Just like the other one, we will just work on the basis of what has been done, as opposed to the timing of something that we might hope would get done.
Agree.
That way nobody builds up expectations and gets disappointed in an industry that is historically prone to delays for many different reasons.
But we like you are excited and looking forward to the new contracts that are coming, as well as the new build finance. And we are now out of time. Thank you all very, very much, Capital Link, Nicholas, and Annie and Paul. And thank you, Erik and Robert. And we will pass it back over to you, Nicholas.
Well, thank you, Robert. Carl, Erik, and James. This has been a great presentation, and you have had an avalanche of questions. There are still more in the queue to be answered. So thank you very, very much for a very dynamic and insightful presentation. Concluding to remind everybody that this presentation will be available for replay on demand. And again, thank you to everybody for joining today.
Thank you.
Thank you.